Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
We've been talking a lot, David, in this podcast about the rise of gold, about the kind of, the choppy path that Bitcoin has wrought, and about demonstrating that it really hasn't been digital gold in any respect. It has been quite different. And this chart at the end really shows the difference in performance between silver, again, less talked about than gold, but hitting an all-time high, and gold performing very well and sustaining up there. Bitcoin having a very rocky past few months, despite a sort of a U-shaped recovery in the past week. So I'd love you to talk about your thoughts on some of those other assets that could form part of a portfolio besides the traditional ones we mentioned at the beginning, and that will be how we close out.
Well, thank you for that opportunity. So no Bitcoin in my portfolio. Wasn't I stupid? Aren't I clever? Then I think the sort of complications of gold, silver. Let's keep it down to the simple things that we can talk about in a short period of time. But I think that gold it has been performing well, and has performed well for a very clear reason. I started my career in 1980, just as the previous gold peak happened. So I saw the damage done after that. And I wasn't really involved in the market for a long time. I think what changed my mind was really that when Russia invaded the Ukraine, and the Russian dollar reserves and US treasuries were frozen, that any sensible manager of central bank reserves around the world would have thought, is it possible that we could be next? And I think that has been the huge tailwind behind the rise in gold prices over the last 3 years now. I think on top of that has been, as we talked about earlier, some concern about the reserve status in the US and its security as a safe haven. And then the arbitrary tariffs on different countries who thought they were friends of the US. So overall, I think there's been a lot of central bank buying of gold, and it's driving the price higher. The speculators aren't really in it a lot. I mean, they come in, they go out. But what's really interesting is that this has been driven by price-insensitive big institutions, and they seem to want to keep buying it. So I've got some gold in our portfolio. Would I buy more? Not sure. Am I selling? Absolutely not.
And in our last minute, can you tell us about some of those other asset classes that you think are worth a look and that belong in a portfolio?
Well, I've got a broad range. So we've talked about my favorites. I think Japan is going to be an interesting market to be in the year ahead. I think there's a lot going right for Japan, and has been for some time. As someone said to me, hasn't it gone too far? And then he said, well, I'll give you the answer. It's been a 35-year bear market followed by 3 years of rising prices. I think it might last a bit longer. And I rather subscribe to that. Political change, good companies, what's not to like?